Welcome to your deep dive. We're going to be diving into the world of GameStop today. Specifically, its stock ticker symbol, GME. You've given us a really interesting mix of stuff this time. Reddit posts, some of them looking at potential market manipulation, and even a legal case about some big banks settling a lawsuit about rigging a market worth trillions of dollars.
Yeah, it's pretty wild. What I find really fascinating is how these Reddit users, they're like detectives piecing together all these data points, trying to figure out what's really moving GME's price. I think it shows this growing awareness that the market is a lot more complex than just supply and demand.
Totally. We've got one post that's analyzing GME's price charts alongside dark pool activity, and then there's something called UPI-3 swap values, and then another post that dives deep into Ryan Cohen's investment history, trying to get a sense of what he might do next, now that he has the power to invest, like all of GameStop's billions.
Yeah, and then that legal case is what really caught my eye. Because it suggests that manipulating these markets, even markets worth trillions, it might not have the consequences you'd expect.
Right. So our mission for this deep dive is to help you connect the dots between all of these sources, see what kind of implications emerge, and hopefully have some aha moments along the way.
Sounds good.
Okay, so let's start with that Reddit post analyzing GME's price action. The author's looking at GME's price chart, comparing it to the volume of trading happening in dark pools. They're also looking at something called UPI-3 swaps, like the value of the open swaps and the closed swaps.
Before we get too far into that, I think it would be helpful to explain what dark pools and swaps actually are. For those listeners who aren't familiar with these kind of more opaque parts of the financial world. So dark pools, they're basically like these private exchanges where big institutions, like hedge funds, they can trade large blocks of shares, but without having to publicly disclose what they're doing. So because these trades happen in the dark, so to speak, it's really hard to track who's buying and selling, which can raise concerns about potential manipulation.
Right. Makes sense.
And then swaps. And imagine it's like an agreement between two parties. They're going to exchange future cash flows based on something, like maybe it's interest rates or the price of a specific asset. They can be used for all sorts of reasons, like hedging risk or speculating on future price movements.
Okay, got it. So this Reddit post author, they believe they're seeing correlations between these off-exchange activities, dark pools and swaps, and GME's price movements, especially during those price spikes we saw in mid-2024.
Right, and they specifically chose to look at these UPI-3 swaps because they think that type had the strongest correlation to GME's price.
Yeah, they said something like 70% correlation. It's a pretty big number.
70%, yeah. Makes you wonder why those specific swaps seem to be so closely tied to GME.
Yeah, are other types of swaps at play?
And to what extent are all these off-exchange activities actually driving the price action that we see publicly?
That's the million-dollar question, right?
Yeah, it is. But we have to remember that correlation doesn't always equal causation. Just because two things move together doesn't necessarily mean that one's directly causing the other.
Okay, that's a good point.
And it's important to keep in mind that this Reddit user, this is just the swap data that's been reported by the SEC. There's a lot of swap data that's not disclosed. It's hidden in these packages from the CFTC. So it's really hard to know how many more swaps are tied up in this.
Like we're trying to solve a puzzle.
Yeah.
But half the pieces are missing. You can sort of see an image emerging, but there are still these gaps.
Exactly. And that's one of the challenges with trying to understand something as complex as the financial market. There's always a chance that there's hidden information or unknown factors that are influencing things behind the scenes. It's a good reminder to be a bit skeptical and to avoid jumping to conclusions, especially when we only have limited data.
Agreed. But even with those caveats, I think this post does raise some interesting questions.
Yeah.
About what forces are at play in the market and how these off-exchange activities might be impacting GME's price.
I think so too.
Okay, so we've got one post that's suggesting that maybe, big players are manipulating GME's price using dark pools and swaps. Now let's move on to that other post, the one about Ryan Cohen's investment strategy. The author lays out some of his past investments going all the way back to 2017, and it's like a roadmap of his financial thinking.
Yeah, it's pretty interesting.
It's the diversity of his choices that stands out to me. You've got Apple in 2017, right when the iPhone was taking off.
Yeah.
Then there's Wells Fargo, a huge financial institution from 2016 to 2020. Then he jumps into Alibaba, the Chinese e-commerce giant, in late 2022. and then Nordstrom earlier this year.
Yeah, it's not just what he invested in, but the timing is interesting too. Like he bought into Apple right before their stock price just like exploded.
Yeah.
And with Alibaba, he bought in when it was at a 7-year low, which makes me think he's not afraid to go against the grain and bet on companies that other people might be overlooking.
Yeah, and remember, he has access to all of GameStop's cash now.
Yeah.
Like $4.5 billion
Yeah.
that he can potentially use for investments, thanks to the company's new investment policy.
That's a lot of firepower.
Yeah.
This post author seems to think Cohen's going to make some bold moves. They suggest he could acquire other companies or, like, invest in things that would create a whole ecosystem around GameStop, almost like a baby Amazon.
A baby Amazon, huh?
Yeah.
That's a really interesting shot, especially when you think about how Amazon used acquisitions to expand their reach and create this web of businesses.
Right, but any investment, especially one that big, carries some inherent risk.
For sure.
I mean, a failed acquisition, a bad investment, that could really damage a GameStop's financial position.
Yeah, he's got to strike a balance between boldness and caution. Okay, so we've got one post suggesting that big players might be manipulating GME's price. Another post speculating that Cohen could use GameStop's cash to make some big, potentially disruptive moves. And then, on top of all of that, we have this legal case about market rigging. It really adds a whole other dimension to the story.
That was wild.
This case involves 9 major banks settling a lawsuit that accused them of conspiring to manipulate the interest rate swaps market, which is estimated to be worth, get this, $465.9 trillion.
Wow.
$465.9 trillion. Such a massive number, it's hard to even comprehend.
It is.
And yet these banks, they settled for a combined total of just $71 million, like a drop in the bucket compared to the size of the market they were allegedly manipulating.
Yeah, you'd think manipulating a market of that size would have much more serious consequences.
Right. But the penalty seems almost insignificant.
I know.
And it's not even the first time this has happened. This Reddit post mentions that Credit Suisse, which is now part of UBS, they agreed to pay an additional $25 million back in 2022 to settle their part in this same lawsuit.
Oh, wow.
And the post author also included links to several other posts, highlighting fines and settlements related to swaps, going back years. It suggests a pattern of behavior. And it raises questions about whether these fines are actually a deterrent, or just like the cost of doing business for these institutions.
Yeah, that's a really good point. It's definitely concerning if these big players can manipulate markets of that size and face what seem to be relatively minor consequences.
Right.
What does that say about the integrity of the whole financial system? And what does it mean for individual investors like you and me who are just trying to navigate this complex world?
It's like you're trying to play a game where the rules are constantly changing.
Yeah.
And the other players might not even be playing fair.
Yeah.
It's overwhelming and honestly kind of discouraging.
I know.
But that's why we're here, to help you understand these forces and empower you to make more informed decisions.
Right.
And this legal case, I think, is a perfect example of why it's so important to be aware of what's happening behind the scenes.
Great.
Okay, so we've laid out 3 seemingly separate pieces of this puzzle. Potential market manipulation, Ryan Cohen's bold investment strategy, and big banks getting caught rigging the system. Now let's try to connect those dots, see what picture emerges.
Sounds good to me.
So let's step back and think about the potential connections between these sources.
Okay, I'm ready. If we look at it from those Reddit users' point of view, you know,
Yeah.
the ones analyzing GME, they seem to believe that the stock price is being influenced by these powerful players who are kind of operating in the shadows, potentially using things like dark pools and swaps to manipulate the market for their own benefit.
Right, like they're pulling the strings behind the curtain.
Exactly. And on the other side, you have Ryan Cohen, who's making these strategic moves, trying to position GameStop for growth. He's got billions of dollars at his disposal and this track record of successful investments.
He's like a chess grandmaster, planning his next move.
Yeah, it's almost as if he's building up this fortress, getting ready for a battle against those big financial institutions.
And then we have this legal case as a reminder that market manipulation isn't just some conspiracy theory.
Right, it's a real thing. It's happening, and on a scale that's just mind-boggling.
It kind of paints a bleak picture, doesn't it?
It does a little bit.
Like the little guy is stuck in the middle of a financial war between giants.
It's definitely a David and Goliath situation. But remember, David wasn't afraid to fight back.
True.
And that's what makes this whole GameStop saga so fascinating. It's about individual investors challenging the status quo, demanding transparency, and maybe even trying to level the playing field a little bit.
It's like they're saying enough is enough. We're not going to play by your rigged rules anymore.
Exactly. And it's interesting to think about how Cohen might be positioning GameStop to disrupt those very institutions that were implicated in that market manipulation case.
You mean like that Reddit post speculating that he might be creating a mini conglomerate, a baby Amazon?
Yeah, exactly.
Yeah.
Maybe he's building a company that's not only resistant to manipulation, but can also offer alternative financial solutions that actually benefit individual investors.
Wow, that would be a game changer.
It would be, and it would be a pretty ironic twist considering GameStop started as just a brick-and-mortar video game retailer.
It would be like the underdog rising up to become the new sheriff in town.
Exactly, and I think that's what resonates with so many people who are following this story. There's this sense of hope, this feeling that maybe, just maybe, things can change.
I feel that hope too.
But we got to be realistic. There are no guarantees in the market, and even the best laid plans can fall apart.
Yeah, you're right. We can speculate all day long about what Cohen might do next, but ultimately, only time will tell what the future holds for GameStop.
Exactly, but no matter what happens, I think there are some valuable lessons we can all learn from this.
Like what?
Well, for starters, it highlights the importance of being an informed investor. Don't just blindly believe everything you read on Reddit or in the news. Do your own research, question your assumptions, and try to look at things from multiple perspectives.
Don't just follow the herd.
Exactly. And it's also a reminder that the financial system is incredibly complex. There are so many moving parts and forces at play that we might not even be aware of.
And as we saw with that legal case, sometimes those forces can be used to manipulate the market for personal gain.
It's true. So what can individual investors do to protect themselves?
That's a good question.
Well, first and foremost, they can educate themselves. The more you understand about how the market works, the better you'll be able to spot those red flags and make smarter decisions.
Knowledge is power.
It really is. And it's also important to be aware of your own biases. We all have them, and they can cloud our judgment when it comes to investing.
Our biases can lead us to make emotional decisions rather than rational ones.
Exactly. Diversification is key too. Don't put all your eggs in one basket.
Right. Spread your investments around to reduce risk.
And be wary of anyone promising easy money or guaranteed returns. If it sounds too good to be true, it probably is.
There's no such thing as a free lunch.
Exactly. Investing takes time, patience, and a willingness to learn and adapt.
I think this deep dive has given our listeners a lot to think about.
I agree. It's been a fascinating journey exploring the world of GameStop market manipulation and the changing role of individual investors.
But before we wrap things up, I want to bring up something else that's been causing a lot of buzz online.
You mean those photos?
Yeah, the photos of Ryan Cohen with that controversial figure.
Oh, right. Those sparked a lot of debate online. Some people were concerned about Cohen being associated with that person, while others just brushed it off as no big deal.
It's definitely an interesting wrinkle in this story.
It is. It highlights how, even in the world of finance, personal connections and associations can have an impact.
So how should we interpret those photos?
Honestly, without more context, it's tough to say for sure what they mean.
It's like a piece of a puzzle without the surrounding pieces.
Exactly. And it's important to remember that public figures, even those in business, have personal lives and relationships that might not always align with what the public expects.
Right. We don't want to jump to conclusions based on limited information.
Exactly. But it is a good reminder that even as we're analyzing data and financial strategies, we also need to consider the human element.
People are complex, and their motivations aren't always clear-cut.
That's a really good point. So what does this all mean for our listeners? What's the takeaway from all of this?
I think the biggest takeaway is the importance of staying informed and being critical of the information you come across.
I agree. Don't just accept things at face value. Do your own research, question your assumptions, and consider different viewpoints.
Be skeptical, be curious.
Exactly. The world of finance is constantly changing, and it's more important than ever to be an active participant in your own financial journey.
Don't just sit on the sidelines, get in the game.
Right. And I think this deep dive has given our listeners the tools and knowledge they need to do just that.
Welcome back to your deep dive into the world of GameStop. We're going to continue exploring those intriguing forces that are shaping its destiny.
It's really been amazing to see how engaged our listeners are with this whole topic.
It really does. It just shows you how curious people are about the financial markets. They want to understand how things really work, especially when it feels like so much happens in the shadows.
Yeah, for sure.
So, as you know, we've been exploring this idea of individual investors, really digging into the potential for market manipulation. We talked about Ryan Cohen's strategic moves at the helm of GameStop. and those major banks that settle lawsuits for rigging a market worth like trillions of dollars.
Trillions with a T.
Exactly. And as promised, we're going to dive into some of your thoughts and questions today. The insights that you, our listeners, have shared with us.
I'm excited to see what everyone's been thinking.
Me too. So one of the themes that really resonated with a lot of you is this idea that GameStop, under Cohen's leadership, could actually be positioning itself to challenge the very institutions that have been implicated in this market manipulation.
It's a pretty bold idea.
It is bold.
But it really speaks to a growing feeling among some investors that the traditional financial system, as we know it, is ready for a major shakeup.
Right. Like it's ripe for disruption.
Exactly. And maybe GameStop could be a part of that disruption.
Yeah. Several of you pointed out that those massive cash reserves, we're talking about $4.5 billion, it gives the company so much flexibility.
It's like having an arsenal at their disposal.
Right. And with that new investment policy in place, Cohen can invest that cash directly into stocks.
The possibilities are endless.
Endless.
Some listeners even speculated that Cohen might be waiting for the perfect moment, maybe even a market crash,
Oh, wow.
to swoop in and acquire some undervalued assets, or make some strategic investments that could really disrupt things.
It's that contrarian thinking, seeing opportunity where others see chaos. It's something we've seen from Cohen before.
Totally.
Remember how he bought into Alibaba when it was at a 7-year low?
Yeah, he's not afraid to go against the grain.
Nope. And a lot of you also brought up a really important point. While these big banks are settling these lawsuits for market manipulation, the penalties often seem pretty insignificant, especially compared to the scale of their actions.
It makes you wonder if those fines are really a deterrent or just a cost of doing business.
Right, like a slap on the wrist.
Yeah. Several listeners even use the phrase two-tiered justice system, suggesting that individuals face much harsher consequences for financial crimes than these large corporations do.
That's a valid point. And it definitely raises some questions about fairness and accountability within the financial system as a whole.
Absolutely.
Okay, now let's address those photos of Ryan Cohen. The ones of that controversial figure.
Yeah, I figured we'd have to talk about those.
A lot of you are thinking about it, and I understand why. There are valid concerns about whether this association could impact GameStop's brand or even alienate some investors.
It's a tricky situation.
It is.
And it's something that Cohen and GameStop's leadership will have to navigate carefully.
I agree. As I was reading through your comments, what really stood out to me was the diversity of opinions.
Oh, yeah.
It just shows you that even within a focused community of investors, you're going to have a wide range of interpretations and beliefs.
People come at it from different angles with different experiences.
Exactly. And I think it highlights the importance of critical thinking and doing your own research, rather than blindly following anyone's lead.
Or getting caught up in groupthink.
Right. Don't just follow the crowd. Think for yourself.
There's no one right answer when it comes to investing.
No, there isn't. So as we wrap up this deep dive into GameStop, I want to leave you with one final thought. The future of finance, it's being shaped right now. And individuals, through their investment choices, their communities, and their demands for transparency, they're playing a bigger role than ever before.
It's an exciting time to be an investor.
It is. So stay curious, stay informed, and most importantly, stay engaged. The story of GameStop is still being written, and your voice matters.
It really does.
Thank you for joining us on this deep dive. Until next time, keep exploring, keep questioning, and keep pushing for a more transparent and equitable financial system.
We'll see you next time.